Let's get to the commodity markets now with Jonathan Barratt, Managing Director of Commodity Broking Services, along with our guest host, of course, Greg Canavan from Sound Money, Sound Investments. Jono, good to have you with us today. All right, I'd like to have a conversation between the two of you here. Jono, I'm going to kick off with you because we were talking about this right before the break. Greg is currently telling clients to avoid commodities.
I think we have to be selective. I think there are some of your primary inputs, particularly copper and oil, which we've got to be careful with because we are at that stage where copper inventories continue to build. And while inventory is building, when you have a concern about economic performance, then you have to worry as to whether or not that price will continue. We are actually short copper and have been for about 2 or 3 weeks. But other commodities, there are some very good bright spots. And that's more in the grain area, which we've talked about as well, where we see more there at the lower end of their ranges, historical ranges, and they're about to pick up, we feel.
Are you specific like this when we're talking about avoiding? I know you like gold.
And I don't consider gold a commodity, so I'm talking more about the base metals and comments we made earlier about the huge growth we've seen in China with their stimulus packages. Obviously, that's benefited LNG, coal, iron ore, all those sorts of markets. So my concern is more around those base metals and the bulk materials. I guess just a question on the agricultural commodities. I mean, how do you go about working out when's a good time to invest there? Because obviously there is so much risk around weather and all those sorts of things. I mean, what do you look at specifically when you're trying to work that out?
Yeah, we do take a macro approach to it. We look at how the globe's shaping up. We look at shortages. Yep. At the moment, we've seen China has been a major buyer of soybeans. Why? Because they've got drought. They will continue to support the market on any dip. Yep. And also we look at where the US dollar is because that's another component. And when you can get the timing and all that together with some of your fundamentals, you can work out when is the right time to start to move in. The key, obviously, is timing. Yep. For us at the moment, grains are very important because we are at that area. But as you mentioned in China, with some of your primary inputs, it's a concern. They had their stimulus packages, and now they're worried about a bubble. So now they're turning off those stimuluses in a certain way. New rules coming in, and that's why I think we've got that concern on copper at the moment.
Yeah. And I know that one of the commodities that you're watching very closely now, and we should take a look at the chart of this, is sugar.
Sugar, yeah.
I mean, where's it going? Can it go further? Are we going to lose another 50% here?
Well, that's one commodity which is you've got a whole lot of puns around it if you need to, but at the moment, at the beginning of the year, it was trading around 30 cents, and we're now down to 14.5 cents. Now, this is an interesting commodity because it's all been on the back of weather drought, weather monsoons, more rain, that sort of thing. And at the moment, India's just come in with a crop which is 24.5% larger than the crop last year. And we've just seen Brazil, which has come also with another crop. Now, the interesting thing here is that a lot of the funds have taken this trend. And the trend has just been monotonously down for about the last month and a half. And it will break soon, but at the moment, I think the funds are ruling where that commodity will go at the moment.
So, where's that going to be?
Well, I hope we're getting close to a low, because I've got an unhealthy position which I'm going to try and lift up.
Do you know, a couple of years ago, there was a big talk about ethanol and the effect that have on sugar, and sugar was all the rage. Has that completely gone out of the market now? Or?
Look, it shouldn't. I mean, the mandates are there in the governments to provide for these other fuels. Now, with sugar at this level, it only makes sense for them to start to put that back on mainstream. Now, we do have ethanol in terms of the petrol starts. It's just a matter now of just pushing it. Sugar is at its cheapest level we have seen for a very long time, so I'd like to see more resource going back to that ethanol production. The question is, will the government step up and really start to push it here because it's at a good price?
And how do you get exposure to sugar in the Aussie market? How do you guys play it?
Yeah, we basically look at it via a CFD or via the futures, one of the two. There's quite a few contracts around the world, but it's purely leveraged or it's via the options market on those futures.
Yep. How do you get access to sugar in the equity market?
It's quite difficult. I think there's a couple of companies out there, Maryborough Sugar, CSR, but often the direct exposure to sugar is a lot more difficult to get. You've got balance sheet issues, you've got all those other things, so that's obviously a better way to play
it. There we go, we're doing deals here on CNBC this morning. Good stuff. Thank you so much, Jonathan. Great to have you with us today. Jonathan Barratt with us there from Commodity Broking Services.